Good morning, listeners, and welcome to the weekly podcast based on fundamentals. I'm Shrikant Chauhan, and I will brief you on highlights of the previous week and few fresh stock ideas that we have introduced. Last week, the global markets offered significant support to our markets. US stocks rallied to their best week since February, lifted by the robust gains among shares of everything from banks to oil producers and manufacturers, as weaker than expected inflation data eased worries about a sudden tapering in stimulus by the Federal Reserves. The Dow ended 3.4% for the week to close at 34,433. In addition, news that US President Joe Biden had secured a bipartisan infrastructure agreement with lawmakers gave a boost to stock towards the end of the week. The plan is valued at 1.2% and $1.2 trillion over 8 years, of which $579 billion in new spending. Yields for benchmark 10-year US Treasuries jumped back above the levels of 1.5%. On the oil front, oil prices rose for a fifth week after climbing to their highest since October 2018. It is on the expectations of demand growth will outstrip supply, and OPEC Plus will be cautious in returning more crude to the market from August. Brent futures rose 62 cents to settle at $76.18 per barrel. Indian markets ended in green, adding over 1% in the week ended June 25th. The Wall Street witnessed high volatility in the week gone by amid FNO expiry as well as Reliance AGM and updates on the new variant of coronavirus. Foreign institutional investors sold worth of rupees 1,500 crores, while domestic institutions bought equities worth of rupees 5,000 crores. The major event of the Reliance AGM ended on a positive note. However, the stock fell to its lowest level in the last 4 weeks. We have ad rating on Reliance Industries with fair value of rupees 2,200. Rupees 750 billion investments in new energy foray focusing on solar energy ecosystem. Strategic partnership with Saudi Aramco expected to be formalized in the current year. 3 times growth target in retail business over 3 to 5 years, with plans to add 10 million merchants under JioMart, and launch of affordable 4G smartphones in September. So these are the few reasons based on which we have an ad rating on Reliance Industries with a target of 2,200. The metal sector is doing well, and we have added another company to our research universe, and it is the largest steel producer in India. It's a PSU, that is Steel Authority. SAIL is a high cost producer, is in a sweet spot to benefit from higher prices in steel, iron ore, driven by China's trade policy changes and supply side reforms. Its expansion projects are at the final stage of completion. Strong FCF should help to reduce leverage from 13 times net debt EBITDA in financial year 2020 to 0.8 times in the forward earnings of 2022. We initiate coverage on the stock with a buy rating and fair value of rupees 170, assuming mid-cycle margin and significant upside optionality. For the peak of the week section, we have selected M&M in the auto sector on the parameters of monthly auto numbers, expansion in monsoon, and attractive valuation. We have chosen Mahindra & Mahindra for the peak of the week with an upside of 22.8%, which is equivalent to rupees 975 On the back of, the company will launch models, focus on EV portfolios, focus on sport vehicle utility, that is SUV, core brand differentiation, and will build path to profitability for global subsidiaries. Mahindra & Mahindra management has taken multiple steps to improve its capital allocation strategy by selling stakes in loss-making subsidiaries and exiting certain joint ventures or deals which would have consumed capital. Turnaround in international farm and auto subsidiaries will aid the company to meet its return on equity target. We value Mahindra & Mahindra on sum of the parts valuation. That's all from my side. With this, I'm ending today's weekly podcast. Thank you very much for listening in and have a great day to all of you.